Welcome to the company presentation and a little overview about the investment story of the Nemetschek Group. Happy to share the details, and I'd like to start with really what we consider the market potential in AECO. That stands for Architecture, Engineering, Construction and Operations, and that's our main focus. And by the way, already the first differentiator also when we compare our business model to some of the competitors. We are a pure software play just focusing on the AECO. We wouldn't serve the same software going into manufacturing or other industries. But what are the big challenges really for the construction industry? The challenges on the left side that you can see is just a few of those that typically you would hear when talking about these industries. Affordable housing is a big theme. There needs to be more capacity to be built. Urbanization is driving that. The costs are going up, especially in the metropolitan areas. So there is a vast interest of all to keep that as affordable as possible. Then the second is probably something that isn't new, but hasn't been really solved. None of those construction projects, especially the larger ones and the more complex ones, are alike. Many of those projects start from scratch because they're different and they're complex. So construction projects suffer from a time and cost pressure. It's project management with effects on costs, construction time, quality. How many times have all of us experienced a construction project running over time, over budget, overruns in resources, had to do replanning? And then there is the last aspect on the left or bottom side, that is the sustainability. Construction industry for many years has almost been ignoring that aspect, and there is pressure. So the climate protection requirements are putting the industry under more pressure. And the overall goal, I think, is to just conduct construction projects in a more sustainable way. On the other side, on the right side, we would see that there's also challenges for the stakeholders. So you might call them the parties involved, which is the seamless collaboration being one of the major issues that typically in construction projects, particularly when they're large projects, think about an airport, a hotel, hospital, and some of the complex infrastructure projects, the collaboration is essential and there's many parties involved. That has to be constantly further improved in order to reduce the potential loss of information, which typically happens because of those silos. Each of those parties involved operates in their respective area, and there is data handover, there's information flow that leads to gaps. And the more you collaborate, the better, the more seamlessly the information can flow, the more the likelihood, that's what all statistics show, that construction projects are in time and in budget. Then those conditions, if we think about the open data standard, we are proclaiming and promoting the open BIM as the philosophy, as a basis for fair competition and seamless collaboration. Don't think of closed data standards. The data must be allowed to flow from one party to another, because there isn't any singular construction project that just gets served by one party. That is just unreal. And last but not least, and that is the, I think, great potential in our industry, the investments in digitalization have been lagging behind. Despite the well-known benefits of that, many companies, such as construction companies, are still hesitant to invest in the future. The good news is that's opening up a little bit, and we see positive mindset from top-down regulators to also the pull effect here from those parties involved, that they would like to actually go and jump on that train that has left the station, of course. And there is countries that we will see in a minute that are greatly advanced and others that are unfortunately still behind, which is a good news because that is our potential. So going into that a little bit deeper, if we think about the level of digitalization and how large that construction market really is worldwide, these are astonishing numbers. But the downside is that we all have an interest in reducing the waste that happens. And you see a number of at least 20% that we have pulled from various experience and projects and statistics and research. And that is material. It can be the construction rework. It can be the budget per se. It can be the time aspects that almost all complex construction projects are laid. And then there is the inefficiency and the productivity aspect that gets neglected. Most of those, by the way, and that's the bottom core message, are because, that's our strong belief, the ineffective communication, the ineffective planning, or insufficient collaboration of those involved parties. That can be done better, and we have several reference projects where this did work out, and that's why we entertained the thought of launching that out worldwide. Another aspect as a deep dive is the sustainability. As I just mentioned already, it's gaining a greater importance for our customers, for the entire industry, we could say. And we would differentiate between, on the left side, a footprint that all of us and the parties involved can do, and that's the energy, for example, use, or the CO2 emissions. It is the construction and demolition that accounts for more than a third of all the waste in the European Union, for example. And also during the construction phase, you would see that materials get wasted, and there's a lot of rework because of the previously mentioned effects. On the other side, we talk about the handprint, and that's what, if you use the right solutions, i.e. intelligent software tools and software solutions, you can impact all of those. Be it the start of the planning, to plan accurately with modern 3D tools, be it the architects, the engineers. Simulations are very important, energy analysis, for example, and then calculate the exact amount of materials and resources overall. Then when it goes into the build phase, which is kind of the next phase typically that construction projects go through, we would see that an optimized usage of the resources is doable. You just have to be more precise in cost and time estimations, and modern software tools help you doing that. Not even mentioning, again, the energy consumption and the waste with, for example, prefabrication that can do a lot when it gets done properly. Last but not least, when buildings get done and finished and established, the third typical phase would be when they go into operation. That's what we call the operate and manage. And last but not least, of course, there's the renovation and demolition, which is also a big aspect of our industry. And renovation has increased a lot. And when you go through demolition projects and experience from the parties involved, they will tell you that a reuse of materials, had we known which kind of a material by which party was built into a certain construction project, then we could have handled that better. But people simply do not know, because the start of that circle already is not used to the extent it could be. And that's our mission, of course, that our tools can provide the benefit. If we want to deep dive into a little bit more statistics, so what's the opportunity really? Nemetschek as a company, as I said, is addressing this AECO software market. That's our pure play. We're one of the leading firms. It's a complex material. And on the left side, you see that how our target customers are lagging behind other industries. When we think about that, travel, telco, industrial fabrication or manufacturing, wholesale, all of those have a greater level of digital use cases already. Construction is lagging behind. And those are numbers that haven't been really changing a lot or improving a lot. And that's common knowledge. But we need to remind ourselves that this is actually the upside. This is the opportunity out there. On the right side, we would call that an addressable market, also a servable market. So what we see as a TAM, total addressable market, in plan and design, which is the biggest part of our business, is amounting up to 10 billion euro. Followed by a similar amount in the built and construct. So things get planned and designed, or replanned or redesigned. Things then, buildings, construction projects need to get constructed and built, and then managed and operate, which is again three similar markets in terms of the size, but a difference in the penetration that we currently see. Our market share as one of the few firms that have the capability and the technology to serve that market, because it is relatively complex, is in the single digits. And you would see that even if we would include all of our competitors, and we will talk about market shares in different regions in a second, the market penetration is still relatively low. So there's many, many years of growth potential. We just have to roll it out persistently and go our way, step by step, customer by customer, country by country, region by region, sub-industry by sub-industry. That's what we estimate in terms of those customers from the total addressable market that already use the modern software tools that are existent, for example, from us. And when I say us, then maybe this is a good time to give you an overview about what the company Nemetschek as a group looks like, and who we are. We would claim that we've been driving the digitalization of that industry, of that market arena overall, for the efficiency really in the entire building lifecycle. On the left side, we consider ourselves a pioneer for open standards. We have the solutions for the entire lifecycle, from the plan down to then the facility management and operator management. We understand those pain points from our customers. We have a close cooperation with the science, with universities. We always want to constantly further develop our software tools according and addressing the needs of our customers. About a fourth of our revenue really flows back into the research and development, just to keep the products up to date. And we've also been named as one of the 50 worldwide sustainability and climate leaders by the United Nations the other day, because of mainly the handprint, that when you use those tools, the software solutions that we provide, then this indeed does make a difference. Then in the middle, we're really a true global play. Yes, we were founded in Germany. In the meantime, I would say we're one of the remaining 3 top software providers, SAP probably being the biggest, that overall in general you would find as a software play. We're between 3,000 and 3,500 worldwide employees, great teams, that about 25% of them are still located in Germany. The company has achieved roughly 600 million euro in revenue last year, 2020, 24% of which are generated in Germany. 15 brands, and we'll come back to the regional distribution in a second. 15 brands is the operational mode, with solutions for a wide range of customers at 80 locations worldwide. The focus is on Europe and on the American market, and then parts of Asia. And on the right side, this is all where it started from. Professor Georg Nemetschek, our founder and still majority shareholder, he's the spiritus rector really of our group. He and his family hold more than 50% of the shares, and they're interested in a long-term development and a long-term value creation. He and the company got several awards, out of which some are mentioned. I'd like to highlight maybe the third bullet point on the upper right, on the lower right-hand corner, which is that he also and the family are donating a lot. Just recently founded a new chair at the University of Munich, one of the excellence universities in Europe, for an artificial intelligence in construction department to be sponsored by him going forward, because he believes that this is a technology that will gain also a greater impact and importance for our industry. So with this, coming back maybe to what our solutions do, we have organized and clustered the company into those 3 typical phases that any construction project goes through. On the left side, plan and design, build and construct, and operate and manage. We have different solutions that address the specific pain points. You would see them in the middle on the right hand of this slide. And I'm proud to announce that those 15 brands have something that you would call an entrepreneurial freedom and autonomy, as much as they really need in order to be agile, in order to be close to the customers, in proximity to their local markets, to their customers, but yet share the same, I would say, commonalities and interests under the roof of the Nemetschek Group. So when we go around that circle, it's interesting that these are just a few areas of where the solutions could be used. And those come from true use cases, be it just, you start designing a project. I go clockwise, really, from right to left. The cost estimations, the simulations, the design, the planning, all of that, material, energy, design, the quality control, all of that needs to be assured before you really start a construction project. When the caterpillars roll on site, when the shovel really hits the soil, all of that needs to be planned up front. And then you need to be aware of the analysis, the cost estimations, the time estimate, the project management. You might want to prefabricate some of the parts. You go through tendering processes, and then you end up on the construction, really, which is the bubble in the on the left side here. And then hopefully, you collaborate as much as you can so that you stay in time, you stay in the budget when the project gets finished. Ultimately, you need, for many construction works, an operation and a maintenance. That is not as relevant for a single residential home, but it is definitely relevant for any commercial office building, for hospitals, airports, everything that you can imagine, the infrastructure, be it a tunnel, be it a bridge. There's a lot of also remote maintenance that needs to take place. That has gotten, by the way, also some additional interest during the Corona pandemic. We'll come to that in a second. Last but not least, we talked about the demolition aspects, and that is really the portfolio. It comprises 15 powerful brands. All of them are kind of market leaders in their respective areas. They're probably known from their customers, sometimes even more than the Nemetschek Group as a brand, and that's the strong reputation that they have. Coming back to what I mentioned earlier, Nemetschek Group I would consider a true global play. The focus is in Europe. You see that 25% of the business we would still do in the German territory, then about a third of the revenues in Europe overall without Germany, and then the Americas, which is more North America, quite frankly, than Latin America. And in Asia, that is the smallest out of our regions because of also local regulation, because of entry barriers, because of IP protection issues that many software industries have with parts of Asia in this respect. But if you think about New Zealand, Australia, or Japan, those are countries, for example, where we have a great heritage and where we have a long-standing relationship with many customers. So a true global play with a focus on the before mentioned. Now let's look at what was the financial performance. What's the investment story really? And what is this all about when it comes to becoming a potential shareholder? And why is this so interesting? I'd like to start with the last year, which in a challenging environment, just to give you an idea of how we went through the year of Corona, we were able to currency neutral grow the business by more than 8%, which I think is astonishing. We were operating in an environment that we've all experienced that did start in March last year, hitting our perpetual license business, which is still the majority within the design division, for example, quite hard. But we were able, after the summer break, to recover, which is continuing up to this moment as we speak here, luckily. The recurring revenues are a big share, and they amount up to 60% altogether when we count maintenance contracts, subscription or SaaS parts of our sales altogether. And they've been growing substantially, driven by subscription mainly, which, by the way, is a big theme. We'll see that in a minute overall, and a big priority for the executive team in these days. The solid financial performance in the middle of this chart is important for us. We've been growing and showing an EBITDA margin of close to 29%, which is in the bandwidth of our long-term guidance, the 27 to the 29. And typically that was also given no positive surprises, I would assume, in those numbers from, for example, a currency or any other extraordinary effects, the kind of range where we are able to operate the business with. The cash conversion is very high. The net cash is positive. This is an equity ratio of close to 50%, which we were able to grow in the last year, another 6 percentage points. And of course, we'd like to also consider ourselves a decent dividend payer with the proposal that we currently have put out to the General Assembly taking place in a few weeks. So that's overall a financial position that is very healthy, that is rock bottom solid. We have the financial flexibility to also do M&As on top of the organic growth, which we've been doing in average in the last 10 years. Of course, we've been driving that consolidation amongst smaller software players, medium software players in our space as well. So that there isn't too many targets to be found unless there is a good fit. And we appreciate that multiples have gone up and risen in the last 18 months quite a lot. We don't have to do M&A necessarily because we have a solid organic growth potential. But whenever there is a good fit, be it by region, be it by technology, in terms of adjacencies, we're ready to strike. And that is, I think, a good position. So a little bit more information maybe on the split of the revenues, because I was mentioning this already beforehand. Subscription as a key driver. The revenue share, as you see on the left hand of this chart, in percentage by type and compared to also over the previous year. The 60%, and that's the darker blue one, is what we call the recurring revenues. Everything from the services maintenance contracts accounted up to 45%. And then if you add the subscription and the SaaS, that gives you the 60%, coming from 54% in the year 2019. So that's kind of the pace we're able to grow that. And we have a long-term, midterm guidance that I will show you in a minute. And at that point already, no surprise, I think, to many of you who've been following us, that recurring revenues for us is a key priority. That makes us also somewhat more resistible, and I think has helped us also through this last year. If we then think about how can this develop further, we've launched a model the other day that we've published to the capital markets, that recurring revenues are a priority and will continue to be a priority. If they would grow with a CAGR of 15% in the next 3 years, it could get us to up to 70-75% of the revenues in the year 2023. And I think that's a great number. We don't do it in a just one-way approach. We don't want to fall into this huge dip that typically companies have when they go through a transition from perpetual business into subscription business only. We do it in a phased approach and wherever it does make sense. And there's areas that we tackle one after the other where it does make sense. So you see an illustrative future path of how this could develop on the left side, the subscription and the SaaS, then the overall recurring revenues, and then the split, how this could look like and will look like in the year 2023. Our ambition is to drive that up to the levels on the bottom of that chart, and to still deliver, while we're doing that, a high single-digit revenue growth in minimum and a strong re-acceleration of the growth to the mid-teens after the year 2023 going onwards. And I think that's an impressive and very positive story. If I had to summarize the investment story once again as a compelling position and picture overall, I'd like to use that chart going from left to right, with once again highlighting the attractive end markets, the unique market position, the attractive business model overall, the strong financial position, and the value creating, if it does make sense, if we find the right targets, M&A potential. We have an operating mode where we run the company in 4 strong divisions: design, build, manage, and media. We haven't been talking too much about media so far in this recording, but media is having a correlate and relationship to the AECO industry that for example, when project owners or end customers want to have a look at the construction works before it's actually getting built, kind of a simulation, almost virtual reality, and have a walkthrough through the building, then people would use something called a rendering technology. And that's where we have started to invest into the media business many years ago. But we see an opportunity that goes into the entertainment position. and industry. And that's what we will drive in this number 4 division that we've not had a chance to talk too much about it. But all of those attributes are also relevant for that part of the business, and we'll communicate in the course of this year some more details of how this could go going forward. So that's the Nemetschek company overall. I would say a mode of operation between the decentralized and empowered business units as leaders in proximity to their markets, to their customers, at the same time being a strategic holding that wherever necessary and sensible, those business units, those brands serve the customers either with integrated solutions or with an aligned approach. And I think that makes us strong, because then we would have the flexibility to do both. Coming a little bit to the end of my presentation, I'd like to give you again, this is the results for 2020 and the concrete outlook for 21. We're preparing the company for further growth. I think our ambition long-term must be to prepare the company for 1 billion kind of company size and top line. And that's why we're driving many also internal projects to prepare the company to be ready to master those growth pains, basically, that a company like ours typically would have. The concrete outlook for 2021 is at least a high single-digit growth over the last year, and to stay within the EBITDA range of 27 to 29%. If we're lucky and all goes well, we're aiming for maybe the higher end of that bandwidth. And the ambition for the midterm 2023, we would call it, is a mid-teens growth starting in 2023 and following the successful subscription and SaaS transition with one of the big brands that we currently prepare for the transition, Bluebeam it's called, in the US, and a share of the recurring revenues of up to 75%, which in that number there should be a subscription and SaaS amount of 45%. That altogether is the investment story, a growth story, solid financial position, a lot of untapped potential because of the low level of digitalization and the long-term trends. So that's the investment story overall. I'd like to thank you for your interest. If you want to know more about this fascinating business, please let us know. Get in touch with the Investor Rel team. And thank you very much for your attention.
Hi there, since you watched this company video until the end, I'm guessing you liked the video, and that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.